welcome back. You're watching our continuing coverage here on CNBC-TV18. I'm Shireen Bhan, and we are taking stock of the union budget. There is consensus, and you talk to economists, you talk to rating agencies, you talk to industry, policymakers. There is consensus that this budget has been able to deliver not just on growth, but more importantly on fiscal prudence, and it has not deviated from that, which was the fear, given the fact that this was the last full budget ahead of an election year. Whether it turns the needle significantly on some of these issues that have been identified as strategic priorities, that time will tell. But it certainly builds on the announcements and the momentum from last year's budget and takes forward some of those ideas and initiatives. Joining me now with their take on Budget 2023 is N.K. Singh, the former chairman of the 15th Finance Commission, and Rathin Roy. Rathin, many thanks for joining us. Mr. Singh, many thanks for joining us. And let me start by asking you, Mr. Singh, if I were to make a word bubble of what I have heard from various constituencies on how they've described the budget: bold, credible, 360, bottom-up. I want to get a word cloud from you. How would you describe Budget 2023? What have been the standouts for you, the outliers for you, and any disappointments, if at all?
So I think there are a couple of things which clearly stand out. First, I think that, as you correctly pointed out, that this has been a responsible budget, and it's a responsible response because it has adhered to the path of fiscal consolidation. It has had a 0.5 percentage point of fiscal consolidation this year from the previous fiscal year. Now, whether it is adequate, should it have been deeper, shallower, not getting into that, and we can debate that at length. So that's one, I think, that on the issue of macroeconomic stability. Also on the debt numbers, I think that the debt numbers look a touch better than perhaps the debt numbers looked earlier or could have been thought of. Also, I think that in the context of the uncertainties, both endogenous and exogenous, to some extent, this budget represents the interests of multiple stakeholders: women, youth, small, medium, agriculture, women. So in that sense, a very wide-ranging constituency. It has undertaken significant tax reforms and rationalization. On the indirect taxes, it's now with the GST Council, but surely I think on the indirect taxes there is an incomplete agenda on tax reforms, because I think that the revenue neutral rate on the GST is a little 3-4 percentage point away, which will have a huge beneficial impact in allowing the sovereign to have a much lower draft for borrowings, leaving greater space for private investment, which has begun to show decisive signs of kindling up. On the direct tax side, I think that the fact of taking off one rate is good, but perhaps I hope that this is the beginning of a deeper rate rationalization over the coming years. The fact of some tax breaks to almost every segment enables more income to be left in the hands of the average consumer, and that will feed into better compliance and also feed into additional demand. Finally, two more small points, three. One is, I think, for the states, it has done a good deal by giving the states once again 1.2 lakh crores, in effect against a 50-year staff, but virtually as a grant, which really, and continuing with the somewhat on the fiscal side as a reprieve, which we had recommended in the 15th Finance Commission, but they have continued with it, 0.5 percentage point, no doubt, based on power. So the states have plenty of money. The tragedy is they have not been able to spend it. But on the state side, I think that when people talk in terms what's there for Tamil Nadu, what's there for telling us, this is not a state budget, but in overall terms, the central government has been generous in giving over 1 lakh crore for the capex expenditure of the states, and I think that they should be gainfully utilized. Second, I think it's a big thrust on technology in multiple ways. The digital is a major story, ranging from wide range of economic activity, from agriculture, from education, from health, and from multiple points of view. And last but not the least, the big thrust on the commitments of India on the green economy. So I think that this has been a very responsible response, which looks after the interests of multiple stakeholders, while at the same time responsible in adhering to the path of fiscal consolidation.
Well, Mr. Singh, I have to say I've been doing this through the morning, and that is the first time that I have heard someone describe the budget as a responsible response. But thank you very much, I think, for adding that perspective and that nuance to the conversation as well. But let me bring Rathin Roy into the conversation, who is poring over numbers. He's got them right here on our CNBC-TV18 table. Rathin Roy, do the numbers look credible? Do the numbers look good? Do you buy them this time around?
I do. I have for a while been recommending to the government of India that they become modest. They're not that modest on the floor of the House, quite boastful, but fairly modest, I must say, with the numbers. So let me tell you three things that probably, let me see, no one has told you since 9 o'clock.
I'm waiting.
This is a shrinking budget. This is a smaller budget than it was last year, and that was a smaller budget than the year before. The budget is shrinking. Proof. The expenditure GDP ratio, which is the total amount of expenditure in GDP, is down by 0.4% of GDP this year. And that is exactly equal to the 0.4% fiscal consolidation that the government has proposed. So the way the government is consolidating, and this is the bad news, unfortunately, its Achilles heel is, for the last 10 years, it has not been able to raise the revenue it says it wants to raise. What it has done there, again, has been very modest. So very modestly last year, instead of setting unrealistic tax revenues, they recognized the limitations, and they said, we look for a very modest increase in tax revenues. They did that. But where they failed, and have been failing comprehensively, is disinvestment. Disinvestment numbers have collapsed. And the collapse this year, and this is something you won't know, has come in a major fudge that happened in the fiscal year 21-22. We have the final numbers for 21-22. In the target in 21-22 was 1,75,000 crores. In the revised estimates, they said they only met half of that, 78,000 crores. And now I find all they have done is 15,000 crores. Therefore, on that, I'm not going to believe the government of India, and I want to put this challenge. They claim they have disinvested this year up to 60,000 crores when their target was 65. Modest target, they haven't met it, but they claim they met it in substantial measure. I challenge that. I think when come March or come next year's RE, you will find they have failed to meet the target, because till November, they had only done half that number, and there's nothing on the table to indicate that this government is capable of the complexity of putting through a disinvestment transaction there. So my problem is on the revenue front. This is a government, any government, it's not just this particular administration. India is in a fiscal crisis in the sense it's unable to collect revenues. Forget taxes. Even when it tries to disinvest, it's not able to do it. Therefore, we maintain fiscal prudence by cutting expenditures, and we are doing so, and therefore I'm happy, but the constraint to a poor government remains. And let me give you the third headline. This government has raised the proportion of capital expenditure from the budget. For the first time since 2006, the total amount of money we are borrowing for capex is more than 50 paise in the rupee. 3 years ago, it was only 20 paise in the rupee. That is great, but has capital expenditure gone up? No. If you take the total capital expenditure by public enterprises and the central government, which is all of the central government, that number was 5.3% of GDP in 2019. It is 5.3% of GDP next year. So capex spending from the budget has gone up, capital spending has not gone up. Why is that important? Because if the argument for capital expenditure is that it will have a multiplier effect, you need to have more capital spending. That has not happened. The budget is contractionary yet again, and therefore the multiplier effects will not come. However, we have secured fiscal prudence. The numbers are now more modest. They are far more credible, except they've started the naughty business again with the Food Corporation of India and shifting subsidies there. But overall, I'm satisfied.
Overall, you're satisfied, and that is a lot to get. I'm satisfied from Rathin Roy on a budget day, on a budget night is a lot. But Mr. Singh, let me address some of those issues that were raised here by Rathin. And I think as far as disinvestment is concerned, you know, there's no argument. They have consistently fallen short. You know, even the target that's been set, you know, the government acknowledging that perhaps this is a far more real target. But on the aspect of a shrinking budget and the expenditure shrinking, shrinking. Would you say that we need to focus also on the quality of expenditure, and the quality of expenditure, at least on account of the conversations that we've had so far and in the assessment of the government, has improved significantly? So take on Rathin Roy on the points, the headlines that he's put on the table.
All right. So Rathin, I think, has been articulate in putting forward some issues. First, I think that I myself mentioned that we need to certainly improve the overall tax GDP ratio. There can be no argument on that. I myself said that on the indirect taxes, whereas there has been a significant uptick on the GST, on the goods and services tax, monthly it has gone up. Nonetheless, we are 3 to 4 percentage points away from what would be a revenue neutral rate. And this is widely acknowledged. And I think that we do require that on the GST numbers, a further rate rationalization. And this is something work in progress, so to say. But yes, if that number goes up by 3 to 4 percentage points of GDP, that would be very significant. On the direct tax side, I think that there has been the beginning of rate rationalization on the personal income tax. I think on the corporation tax, we have more or less reached the resting point. This was one of the complaints which was historically always made, that India's corporate rate taxes are far too high compared to the other peer group countries. It has now been calibrated where, as a competitive destination, our corporate rate taxes are, in my view, competitive to the other destinations to attract it. So on revenue, this is my response. On the second point that Rathin made, I think that I tend to share the view that these numbers are much more realistic. In fact, if I may say so, they are quite modest. And it is much better in that sense of the term. Finance ministers are always better off in somewhat under-promising and over-performing than the other way around. So I think that just as last year, she had to some extent had this cushion both on the nominal GDP and on the revenue buoyancy, but I think the outcome has been a very happy one. I think, frankly speaking, I agree that the numbers are modest but more credible. And given the uncertainties, I think that the conservation of some fiscal space, looking at the geopolitical and other uncertainties, has been a very prudent decision.
Well, yes, I think both of you are in agreement on many of those issues, but let's talk about growth. 10.5% is what the budget has put out. The survey had spoken about 11%. Perhaps the higher end of that estimate of 6.5 to 6.8% is what TV Somanathan, the finance secretary, said that he expects, or he at least hopes for. Given what we are seeing across the global economy, I mean, that's going to be something that that the world will watch closely in light of this alternative to China, capital diversification, the changes as far as globalization or re-globalization is concerned. Do you believe that today we stand in a much better position on the back of not just the measures announced today, but the measures that have been announced over the last 12 months as well?
No, I don't think so. I certainly think there is huge potential for the Indian economy to grow. I'm far more ambitious with the right policies. In fact, I see no reason why the Indian economy should not grow at a real growth rate of 8%. But if the idea is to somehow attract investment that would have otherwise gone to China, let me tell your viewers, this is not happening. The major beneficiaries of investment that is not going to China, in order, are Mexico and Vietnam. India is at best a poor third or fourth. Today I saw a rather pompous message from the electronics minister, whatever he's called, saying India now is a major exporter of mobile phones. One, that's not true. And second, the mobile phones that we import everything, including the cameras, which is why she had to give a lower import duty on cameras today, and we assemble them here. So India is not making mobile phones in the sense you would expect, a supply chain leading to, so we have a lot to do there. That's not so much to do with the budget. That has to do with industrial policy. With the budget, what you need is a credible, forward-looking fiscal policy. You need a minimum of day-to-day tinkering with transactions and laws and regulations, and there the picture is mixed. I think every budget, and especially this one, has seen less tinkering and more continuity in trade policy, etc. But the intra-year discretionary actions of government, fiddle with this company, fiddle with that company, don't do X, don't do that. That, I think, continues, and that is, I think, one of the bigger impediments to our reaching that 8% rate of growth. But I must say, Shireen, I'm rather puzzled at the sudden lack of ambition I see in this country. I thought when this government came to power that 8% would be a cinch. Now everyone is saying 6.57 and talking about global headwinds. But this is Amrit Kal. I thought we were beyond global headwind. I thought we were Vishwagurus to the world. And in those circumstances, surely, ye dil mange more.
Yes, the dil mange more for certain. But Mr. Singh, I'm going to let you wrap things up here. What is it that you would like to see from here on? And more importantly, you talked about states and what the budget has done as far as state capex is concerned, and trying to ensure that states continue on the path of reform, linking some of that capex to some reforms as well. But as the former chairman of the 15th Finance Commission, specifically as far as cooperative federalism is concerned, where do you believe this budget leaves that?
Well, I think that on the issue that we are nowhere near our growth potential, given the right set of policies, many of which are really in the process of implementation, particularly on factors of production and so on codification or labor code. But going beyond that, the efficiency and quality of infrastructure being substantially improved through massive investments in various initiatives, the infrastructure pipeline, a project, improvement on the logistics, improvement on railways, improvement in terms of air connectivity, represented by the higher capex. And I hope that many of the states, and Rathin will recall this, that many of the states really were really pleading all the time that they do not have resources for improving state roads, state highways. I think that the extra fiscal room which they have and the extra support which has been given in this budget of 1.3 lakh crore should be gainfully utilized to improve the state level infrastructure, even as the central government improves its reliability, efficiency of its infrastructure. So I think that I agree that the 6.5% base figure is very modest, but look at the fact that there is overall recessionary tendencies. No doubt some of it has faded out. We do not know what the opening up of the China will lead. There is already the IMF's projection looks to be somewhat more optimistic than the earlier recessionary tendency. There are plenty of uncertainties. And in this context, looking at a 6.5 baseline for a GDP number. And don't forget that because inflation is more likely to be within the band given by the Reserve Bank, therefore the nominal GDP is turning out to be what it is, a somewhat more modest one than the one experienced last year. But there is no doubt that there is a huge potential to be realized, provided some of these initiatives which are in the budget get implemented with the alacrity with which this government believes the implementation must go forward.
Yes, Rathin.
Short point, I want to agree with Dr. Singh. I think what the government has done to the states is imaginative and extremely useful, and its persistence with the 1.2 lakh loan, it's effectively free money, okay? Yeah. It's a 50-year loan, is a good thing, and the states would now need to take it up. I would also like to use this opportunity to thank the finance minister from the bottom of my heart for giving a relatively shorter speech. And even if she had to use the word Amrit Kal 8 times as shorthand, I did count, a speech that was largely on point compared to what one has been used to for the last 20 years.
Well, Rathin Roy, that is a good note to end on. And Mr. Singh, always a pleasure. Thank you very much. And I have to say, gentlemen, that we've been doing this since 7 a.m. and this is a conversation that has brought new meat to the table, and that's very hard to do at the end of a long budget day where we've had hundreds of guests joining us. But the two of you gentlemen have managed to do that and bring in your own nuance to how we should look at the numbers and, of course, the road ahead. Rathin Roy, NK Singh, many thanks for joining us here on CNBC TV 18. We're not done. A quick break. Back in a moment with more.